Good evening, traders. Welcome to our daily forex forecast. If you're looking for one of the best daily trading forecast, then you are at the right channel and the right place. If this is the first time you are stumbling on this channel, do well to subscribe, react, and ask any question you have on the comment section, and I will be thrilled to answer. Well, I would like to say that I'm building this channel up, and yeah, I am providing high insights on the market every single day. You can check my track record and you will see how effective they are. I just want you to help me to grow by liking, commenting, and asking questions that you have, and also subscribing to this channel. So, have saying that, let's dive into the chart. And as you all know, we start with the dollar index, which is the US dollar, referred to as the DXY. And if you stick around, first of all, I'm going to tell you where today I'm going to look out where price is likely to go tomorrow. Where do I favor more tomorrow? Now, day trading is not everyday trading. There are some days I didn't even take a trade. Like today, I only take a trade during the London session and the New York session. There wasn't an opportunity and there was no trade. So just because it's a day trading model doesn't mean you have to trade every day, right? So, and just because we are doing analysis every day doesn't mean that we have a bias every day. But despite without having a bias, I have a template where I tell you this, look for that, and if this did not occur, then you have to pay attention to certain key levels. Now, let's go to the chart and let me call you the major key levels you need to look out for on the XY. So, currently, the dollar index, as we know, the overall narrative we have delivered and we sweep, right, the external range liquidity, which is the previous month low. I will save it as what external liquidity rate. Now, why is this a liquidity rate, right? Why do I refer to this as a liquidity rate? Because of how price react off of the area, right? If it's not a liquidity rate, we should see the body of a candle close, and if you even look at where the body lies, right, it is exactly equal to this level, right? If we remove the wick and we only study the body, you will see that the body of these candles are equal. That is what? A relative equal lows. And that is to tell you that on a long time perspective, the price is going to come back all the way to this level. But for now, what do we need to look out for? We need to just look out for tomorrow. And tomorrow is TGIF, but we are not expecting a TGIF trade tomorrow, right? TGIF is just a type of setup that we measure the weekly range, and if it's a bullish week, we measure the weekly range and we expect a Friday to retrace into the weekly range if it's already bullish or bearish. But now we've seen that the weekly range is not large and we have created a longer wick below on the XY and above on Euro. So currently we are just looking for normal day, not like our TGIF normal Friday, the normal Friday price delivery. Now, what do we have here? Now, if you are very good with trading, we see that we have a fair value gap, which is our internal range liquidity. Now, what do we anticipate for internal range liquidity? We anticipate for internal range liquidity to be tapped and used to take external range liquidity. But now, when internal range liquidity is disqualified or traded above it or below it, like for example, this is an internal range liquidity, a bearish internal range liquidity, and price traded above it, meaning that it disqualify this bearish inefficiency. But now it becomes what? An inversion fair value gap, meaning it is becoming an inversion fair value gap to deliver higher prices. And this is one of the major reason behind my bullish bias for the dollar index going in tomorrow, right? Or even it might affect next week. But For example, let's just focus on tomorrow for the main instance. So now that we have seen a bullish move onto the delivery, just like we've called out yesterday, right? We called out to see a bullish move and we shouldn't see a bearish move like that, and it plays out perfectly as we have anticipated. Rather, our highest expansion was this candle high, but we see how price delivered, disqualified it, and even this bearish order block, we see that the price already traded to the 50%, and which is telling us that it has disqualified this bearish order block, meaning that this particular bearish order block will not hold weight, right? We want to trade what we hold weight, right? That is, since the market has already traded above the 50% of the order block, that means this order block no longer hold weight. So meaning that the market is giving us, is tipping its hands to us that there is a run on external range liquidity. Now if we observe this range from here to here, the next external range liquidity we have is this particular Monday candle high, which is the external range liquidity, just like I've put on the chart, and it is our highest expansion tomorrow if market is really going to expand, but I'm not sure, right? To me, I'm not in favor of price expanding all the way to this level tomorrow. Tomorrow is likely to be an insider day candle, but it is going to react on this inefficiency, which is the daily inversion fair value gap or the internal range liquidity, and it's going to take us to external range liquidity, but we might fail to get here. And if it fails to get here, it might also create a fair value gap, right? It might not create uh it might not create an efficient price delivery with this particular candle, right? What I mean by that is the market might not create an efficient price delivery. That, like tomorrow, the candle week will come the way all the way to form efficient price with the Wednesday candle high. So I'm not sure this is going to happen like that on the DXY, which that means tomorrow being Friday is likely to create. I am in favor of it creating a fair value gap and come for external range liquidity, but also tap on the inefficiency. Very, very important. I'm anticipating for it to tap on this inefficiency, then come all the way for the external range liquidity, and yeah, that is basically what I'm looking out for on the daily time frame. Now let's go to the 4 hourly time frame to see how effective and how we can break down structurally the euro the DXY price move for tomorrow. Now this is the 4 hourly contract, and yes, as you can see, we still have our external range liquidity, and this is a liquidity rate also on the 4 hour time frame. Now this is where it gets interesting, and this is why I favor higher bullish move. Now the purpose of coming to lower time frame is for you to be able to, you know, after having a bias on the daily time frame, is for you to be able to refine your bias to see if the lower time frame supports that bias as it sounds or as it looks. So tomorrow we have already a large 4 hourly candle, and whenever we have a large 4 hourly candle like this, what usually happens, the market usually refill the order block, sorry, the expansion candle all the way to the 50, below the 50%. Now if we expect a refill of this of this expansion candle, this 4 hour expansion candle, if we want to see the market refill it to the 50% area, that is, it is going to be, we have our low and we have our high, right? So we've seen that the market already refilled to the 50%, just like I used to tell you guys. We have the low and the high, but now let's measure the wicks alone, right? The body alone, only the body, leaving the wicks, because of the large wicks we have here. Now where do we see the 50%? We see the 50% around inside the daily inversion fair value gap or the daily inefficiency which is the internal range liquidity that is we anticipating to take us all the way back to all the way up to the external range liquidity. Now, yes, I'm an ICT trader. I use ICT concepts to analyze the market, and this is mainly it. And I'm mainly try to focus on external and internal range liquidity because everything moves in cycle. We move from external to internal, from internal to external. Now we want to see price move from internal to external, then from external to internal. When price gets all the way, when price during New York session, when um, price above this external range liquidity, we now say that we waiting for internal range liquidity to be, to be retraced back. And what do we see about when price break above? It did not only close above, it closed above bullishly, meaning that this is a change or a market structure shift, which is a change in the state of delivery. Very, very good. And this 4 hourly fair value gap, just like I've called it out yesterday, that this um 4 hour fair value gap is going to be the leading or key level that is going to take price higher, and it just play out perfectly to the tick, just like I've said on the yesterday. Now let's look at the 2 hour time frame for the dollar index. Now this our fair value gap still, it was still effective, right? So the fair value gap is still effective in price. And let me just add this. So yeah, we see that price take into the fair value gap and deliver higher. Now on the 2 hourly time frame, we see this is a change in the state of delivery. Now this is a liquidity sweep. We haven't seen any confirmed change in the state of delivery, but this particular high that is broken confirmed the change in the state of delivery, and also it leads to the formation of what, a bullish order block. And if we price into the opening price of the bullish order block, then it is also inside the inefficiency, which is the daily internal range liquidity. So mainly you should just, these are the key levels you need to look out for on DXY. So I am going to leave it on this 2 hourly time frame because the hour is just, for now, is nothing more effective on the hourly time frame. But with these ideas, you should already know what to anticipate for tomorrow and how to react with price tomorrow. So let's go to the Euro US dollar. And if you just stick around, there is something that's happened on the euro which makes it more interesting. Now, where do you look out for on euro, right? Now, my major reason why I want to see the euro dollar deliver lower prices, and my highest expansion is the Monday low, which is the Monday candle low, external range liquidity. That is my highest area of liquidity, and my most expected liquidity is the previous day low, which is today candle low. Tomorrow I want to see today candle low taken, which is Friday should take tomorrow candle low if where it is not an insider day candle, just like I've said on the dollar index. So having known this information offhand, how can you apply it to the, apply it on knowing where the dollar is going, right? Even if it is not completely clear on the euro US dollar, how can you now interpret this in correlation to the euro US dollar? Because we know that normally when the dollar index is going higher, the euro is going lower. Since the dollar index is just like the mother of all this market, or the drivers, let's say the driver of majorly this market, so we want to look at the dollar index before we even conclude on any pairs we want to trade. Even if you trade Bitcoin or any cryptocurrency, you need to know what the dollar is doing. All right. So now on the euro US dollar, we have our fair value gap here, but we see that the market didn't completely close below the fair value gap or that in order to confirm it as an inversion fair value gap, and that is why I did not add it to our chart. And also we have our bullish order block, but we haven't traded into the 50% of the bullish order block to disqualify the order block. We have our daily fair value gap, which I also point it out as the key level for our price to deliver into the price, and we see that price actually deliver to it perfectly to the tick. Right now we have already used the fair value gap, and the dollar is showing strength. So since the dollar is showing strength, the euro is going to be showing weakness, but the euro is not showing a complete weakness, right? But we're going to use the dollar effect to analyze our euro, the dollar effect to affect our euro US dollar buyers, and that's why we expecting lower prices. So tomorrow, what I'm looking out for, what I'm more in support of, is that tomorrow the high of tomorrow should be above this particular uh point. If you can see this level I marked, the market already opened. I want to see the high price above, then before we see prices all the way lower prices all the way to the previous day low. If it is not an insider day candle and the price is going to range, then my highest expansion is still this external range liquidity. That is if we price above this particular uh Wednesday candle low, then the market already formed what an efficient price delivery on the dollar index, sorry, on the euro US dollar. And what this a candle close tells you, this particular today candle deliver lower, closing below the previous candle. That tells you a market structure shift, a shift in the state of delivery on a higher time frame. This is just what it tells you, and if you stay long enough, we go on a lower time frame and you're going to see why it is a change in the state of delivery. Right, so let's go to the 4 hourly time frame. So on the 4 hour time frame, we've seen how price deliver structurally. There's so much about 4 hour. 4 hour is so sweet. Now on the 4 hour time frame, we see this area I called out, the fair value gap I called out yesterday. Right, I called out this fair value gap yesterday, that, and also majorly I call out this bearish order block, that price is going to use it to price lower, and we did exactly to the tick. Now we've seen that price already deliver into the 4 hourly and breaks structure, and this is the previous candle low which I just marked here, and we have a swing low here, and this is a swing low, a swing high, a lower low. That is a high, a low, a high, a lower low. That is, we break on a structure, and that is because it is the first on a higher time frame perspective. It is the first break of structure since we have been bullish, and that is why we now refer to it as what, a shift in the state of delivery, or a change in the state of delivery. Well, it's just English per se, whatever you want to call it, a change of character, any, but just know that the market has changed the way it wants to deliver. Now, why I am in support of price coming back all the way above this particular line before going lower, and if we go beyond it too much, the price should use this for our internal range liquidity to deliver us to the external range liquidity. That is, this should act as a resistance if price ever gets to deliver all the way above, all the way to this place. Then it should act as what, a bearish or a resistance in price that is going to deliver price lower. And also, I'm not in support of price seeking previous day high, which is today candle high. That is just it, as simple as that. Then on a 2 hour time frame, this is where it gets more interesting, right? If we look at the blue line which I marked for the higher time frame, changing the state of delivery on a 2 hour, we see that we break below it. Then the market ran above, sweeping a what, this is a, a kiss of death, turtle soup. This is a turtle soup sweep. We sweep the turtle soup price into the for hourly fair value gap, and also tap on the bearish order block, on the 4 hour bearish order block, then price rejects from it and again break structure lower. So we have seen how many break of structure we've seen. We have on a 2 hour time frame, we have one here. So we have one, oh sorry, yeah, we have one here, because after the sweep of the liquidity, we have one, we have two, we have three, and this is the fourth one going. So what do you anticipate? A continuous break of structure, but there is going to be a retracement. After the break, there is a retracement, a break, there is now there is a break. There should be a retracement before continuation. So in that break, we in support of price refilling these inefficiencies is a fair value gap, a bearish fair value gap, but because it's too big, so just like if and again, this impulsive price lower that creates this large inefficiencies is also telling us that price is more willing to move lower faster, and that is why I call this external range liquidity as my high X expansion. So the price is willing to move lower faster and in a swing point. So let's go to the hourly time frame. On the hourly time frame, we almost have the same thing with the 2 hour, but we see perfectly the rejection that occur on this area and how price use it to deliver lower, alhamdulillah, to deliver lower. And this blue line, we see it is inside inefficiencies, so there is going to be a rebalance of price before we continue delivering for our main buyer. So our first target will be previous day low, which is today low, if depending on where we meet price tomorrow, right? I don't know how to break this down for you, but I already write it on my journal, but there's no need to add that on on daily videos, because I don't want to make this video too long. I just want it to be concise and contain raw data. That is very, very important. Now this is the GBP, which is the pound, or some people call it cable, right? So we have on the cable, we have our inversion fair value gap confirmed, and we have a very, very large day candles today. What do I talks about a large candle like this? Whenever we have a large candle like this, all the first thing you have to do is pick your measurement tool. You measure the high and the low and expect price, right, to retrace to the 50%. And if we expect price to retrace to the 50%, the 50% is above or the inside the daily inversion fair value gap, and also we have a bearish order block here. And now this is just to confirm that even if tomorrow did not get all the way to the 50%, it is going to lead to the formation of what? A bearish fair value gap, or a fair value gap above here. If because yeah, there's not going to be an efficient price delivery with Wednesday, just like I've explained with the euro US dollar. It is not going to be like that for the GBP. It is going to create fair value gap, which is going to be a bearish fair value gap, or inefficiency, bearish inefficiency in price. And we see that today candle already takes the Monday candle low, and the next daily candle, previous day candle that we have that has not been tapped, is the Friday candle low. And if we want to use a swing point, then we have the Thursday swing low that has not been tapped. Then if that's the case, I'm anticipating for price to seek for the external range, this external range liquidity, using the what is the internal range liquidity. And also we have this bullish order block. We haven't even react much on it. If the market close above with if the daily candle tomorrow close above this opening price, close above this order block high, that is another signature in price telling us that the market is likely to be bullish for the GBP, or the market delivery for GBP is going to be slow and steady, just like GBP used to be. GBP is a very slow, steady, peaceful market, right? but sometimes it can be whack, just right. This market are troublesome sometimes. So this is the 4 hourly time frame, and if we look at the 4 hour, what do I say about 4 hourly candles? I say when we have a large candle like this on a 4 hour, we measure the 50%. Just like we measure this daily 50%, that we have our 50% here, we can also do the same by measuring this particular 4 hourly candle, and we have the 50%. We haven't even traded to the 50%, so we anticipating for price to trade above the 50% and react on this, on the internal range liquidity, that is going to take us to external range liquidity. So this is just the efficient or algorithmic price delivery of the GBP. I don't know, some people still want me to go lower just because they want more concise price, because I can't tell you that you should sell from this internal range liquidity, because one of my major reason of having a key level, an area I want to look out for, I look out for these areas during my session and during the time I am trading, to see how price react of these areas. So the way price react to it, that will now bring my response. But I already have a bias, and I already have a conclusion of what I want to do, and that is what really matter most for all traders. So yes, on the lower time frame, which is the hourly time frame, we have these inefficiencies here, then, and this particular large hourly down close candles can be another good target, which is the high, can be a good target for any bullish entry. Now we have our highest expansion is still remain this external range liquidity. You can go to your chart and look at it using forex.com, the British pound versus the US dollar. Now finally, let's go to Bitcoin. Like I've told you guys since, Bitcoin is still ranging. Oh my goodness, Bitcoin is still ranging, and I have seen something. There's something I've seen on Bitcoin now, and which is very important for me to mark out. This, if this, sorry, if this is a is an external range liquidity rate, that is, the price has rated this high, right? We've rated this high, and we are reversing on the on Bitcoin. Then if this is a reversal, depend on how we later, the market later close for Bitcoin, because today Bitcoin is not closed yet. We still have 43 minutes 37 seconds for Bitcoin to close. And yes, I have been telling you guys that my hands are tied on Bitcoin, because I don't day trade Bitcoin, I swing trade Bitcoin. So because of that, my hand are sometimes tied most of the time on Bitcoin, except I see a clear move. And ever since I tell you guys my hand are tied, you can see the market has been on a range. So if you want to do something here, you are more likely to take a stupid loss, all right, a devastating one, and which is going to speak bad of you. So yes, we have this. Okay, let me clone this particular one so that I can add it as, let me clone it so that I can add it there and remove this other one. So this is just it. Basically, we have seen a external range liquidity rate and prices moving down. If we close below here, that is, we are forming a swing high, and from a swing high perspective, then tomorrow candle should deliver, maybe tap on it and continue to go lower if we are bearish. But on the lower time frame, let's see if there is any significant change in the state of delivery here, right? Oh, wow, this is something else. We see this is a relatively equal highs, right? On the lower time frame, we see a relatively equal highs here, which makes price, which is significantly telling us that there might be a reverse price to sweep this liquidity. So there is a high tendency that tomorrow might also come back and sweep this liquidity. If not, that is, whatever bearish move that we have is not going to be a long time bearish move. or otherwise it's going to be a long time, but price is definitely coming back all the way to this level because of that, the equal highs. Now we have a swing low here. We just broke it, so we don't know if the market is going to close below it yet or close above it. So maybe tomorrow you can check for yourself. If we close below it, maybe, and we form a fair value gap, then you can take a small short. But I'm not participating on this till next week. I want to see how this Friday close. All right, that's it for me on the Bitcoin. And also using the 2 hour time frame, we have already seen a change in the state of delivery here, and that equal high still remain. Right, I don't want to I don't want to see equal highs like this line in the charts, very clean and clear. But yeah, this is just it for the Bitcoin. Right, I've not been having a good price action for Bitcoin lately, but hopefully Bitcoin will do something nice. I can't tell you, I can't lie for you. If I see something, I'm going to point it out, except it's above my current understanding and my current knowledge of price actions. So I hope this video made you well, and I hope you learned something from this video. And if you do, please and please subscribe to this channel, stay active, and tomorrow or Saturday, tomorrow is Friday, so Saturday I'm going to give us our weekly forex review, and for you to be able to for it to guide you ahead of next week. This is how we do this every day. So if you want to receive notification for tomorrow, subscribe and turn on the notification button so that whenever I did a video and I post, you can receive a notification. I know that, oh yeah, I've sent another video. Thank you guys, see you tomorrow.